Hey guys, Mike here. So I hope everybody's holiday was really good. I know we had a great one. We're back home safe now. So we definitely enjoyed it. My little boy got a whole bunch of toys. So he's a happy little boy to say the least. Now, I'll definitely put out videos this week. But as you can see, if you were looking at the market day, as we said, low volume, low participation. A lot of the big boys are still on vacation for sure. That does not mean stocks will not move up or down. Okay, you saw that today. We saw where money was flowing. If you didn't notice, I'll show you and everything. Shouldn't be any surprise whatsoever. Also talk about some sectors. I think the reason why you're going to see them this way is because they're probably going to be mostly pretty hot in 2024. Again, I could always be wrong on that, but let me know what you think in the comments. Now, of course, and we'll get into a few charts at the end. But I know one thing that has to be on the Treasury's mind, not so much the Fed, but I know they do communicate and everything, has to be going into 2024 with the amount of bonds they got to sell. But this is the U.S. federal debt held by the public, and it's a percentage of GDP, as you can see right here. And because the Fed funds rate is so high and yields are much higher than they've been in a long time still at this point in time, and you can see the percentages on the side right there. But you got to be thinking, maybe one reason the market's thinking the Fed's going to cut, not just because it's going to be a hard landing, but also just the fact, I'm sure the Treasury is going, hey man, if everything's good, we need you to cut. And you can see in January, they don't have a rate cut or a rate increase in there, but come March, because we skipped February, 73% chance of a 25 basis point cut. And then we skip April and look at May, 69% chance what they're saying will be down by 50 basis points in cuts by April and by May. And if you continue to go on, you'll see it goes down even farther. So they are pricing this in, so to speak, because the Treasury, again, they're having an issue, way more debt coming up in 2024 because the drunken sailors in Washington. It's not like they're going to cut their spending or anything, right? They may cut something over here and they'll just spend it over here. So again, that deficit continues to grow. And of course, that's why what are they going to do? They're going to cut Social Security or raise the age and do everything they can because and the Fed funds rate is this high with the debt being at record levels, those interest payments get high really fast. And that's what happened. I think we're on set like $1 trillion in interest payments this year coming up, just in interest payments, by the way. And so again, we'll see if, Janet Yellen's talking to the Fed and Jerome Powell saying, what are we going to do here, right? Because if inflation does come down to where they feel somewhat comfortable, we'll see if it's the 70s over again. We'll see what happens on that and they start cutting or whatever. But obviously, most people are just saying the reason why the Fed would cut is because things have continued to slow down in manufacturing and production and all that good stuff and services. So again, we'll see. Now, what's the S&P trying to do? Trying to set all-time highs, and it is right close there, man. I think it is like 0.68% away. I just did a whole members video on this. What happens when we hit all-time new highs in the S&P over the last like 30-something years. And it's pretty interesting to see, and you see obviously the NASDAQ 100's already hit it, the Dow's already hit it, and so, IWM's way away. It'll be dead last if it would ever get back to its all-time highs. But again, I mean, it's been a big move up. You can see, put in the comments, do you think we're going to reject as soon as we hit the all-time high, or do you think we're going to pierce right through it and then come back down and retest where the all-time high was and then end up turning that into support? Now, where did money go today? Well, it went to IWM again. Why? All of a sudden you can see here you got this falling wedge, been in for over 2 years now, actually almost 3. And you can see right here that it's finally starting to try to break out versus the SPY. So it's IWM versus the SPY, right? The SPY has absolutely just crushed it over the last 3 years for sure compared to IWM. And so we'll see if that continues to go up. But you can also see on the IWM what happened. We broke through that 50 Fibonacci retracement level. Is also another very big resistance level, which I'll talk about in just a second. And we'll see if we come back down and retest this level. But that is really a big psychological level for sure. But it finally broke through, I believe that was August 2022 highs for sure, and held that level. When we zoom in here, you can see though, what is that? And guys, before we continue, please hit that thumbs up button. I really appreciate it when you guys do that for me. It helps people find the video, which a lot of new people have been. And if you like the content, think about subscribing. I appreciate all your support. That is a fair value gap. We always react off of them. So 205.92 if we get there, and maybe even less than that. Maybe you get to see a kind of a move down or a breather right there, or a pullback or something goes on. But when we pull up the RSI and those moving averages, if you didn't see, I believe it was probably Friday's video, I was talking about this. You can see we're obviously still in overbought territory, been there for a while now. But when we bring up the moving averages, if that 50 can get and cross that 200 and 100, because you see the 100 and 200 combined basically at this point in time, you can see a really, really big push up. I mean, you've seen it the last 2 times. So that is a bullish thing if that happens. Now, what's going to cause this to happen and what has to happen as well for the small caps to do this? Regional banks and biotech stocks have to continue their breakout. Now, why, and most likely this could continue, as you can see right here. This is KRE about regional banks. We are coming into resistance, right? We've hit it how many times here? 1, 2, 3, 4. This is the 5th time on the weekly right here. So that is nice resistance right there. Maybe see if we get a rejection. If this does say sell down right there to say what I think that's July highs right there, which would be close to 7%, you will see IWM pull back as well. I mean, it's well overdue for a good pullback. I swear it is. But, is it ever going to happen? That's what we got to figure out. Because we are in obviously a strong seasonality, a strong time for small caps. Big money's rushing into them, pushing them up. That will be a 7% drop there. But you can also see what's over here. My favorite thing, right? There's a gigantic fair value gap on the weekly. That's when it crashed and burned before the Fed stepped in and saved it, right? And so you usually, if you draw a fib here, you'll get a rejection when it gets to that golden pocket or something to start moving down. But, we're there. We'll see. We're up against the trend line. We finally get a breather there. Is this going to continue? Most likely, because everybody knows the Fed has stepped in and saved it. I've showed you where they continue to borrow money after money. It doesn't mean they're healthy. It doesn't mean any of that mess, right? But if real estate gets going, small businesses get going, yields keep coming down, and the Fed does cut, and we're not in some recession, then yes, it will move higher for sure. There's no doubt about that. And if that happens, IWM is going to move higher. And if you notice, when IWM has a good day, so do the equal weighted ETFs for the SPY and the QQQ. And you can see this is the last month. IWM, QQEW, RSP, those are the equal weight ETFs for SPY and QQQ, handily outperform the SPY and the QQQ by itself, right? Because mega caps like the Mag 7 just hadn't been doing anything crazy. And you can see just over the last day and 5 days, once again, where's the money going? It's rotating out in the stuff where they can get bigger bangs for their buck. It doesn't mean the Mag 7 is going to go down. It doesn't mean they're not going to go up. It just means they're looking at this going, wow, these are really beaten down. And when you look at the sectors today that perform the best, you got stocks right there. That's going to end up being your semiconductors. Your small cap tech stocks, IBB is going to end up being your biotech, right? And then VNQ is real estate, okay? And I think probably 4, and then let's add 1 cyber down there. It really just software in general. Those 5 sectors are basically picked to be 4 or 5 of the top performers this year. We'll see that continues, but also if you look at 1, 2, 3, 4, or 5 of those, what are they really prone to? To go down in high rate environments and to do what? Go up in lower rate environments. Okay, especially yields. When yields drop, these get affected the most, and they go up, especially if the dollar continues to get weaker as well. Now Tesla, it wasn't much report. I mean, it was up 2%. It was a good day, but I mean, small range for Tesla there, and you can see it didn't hit the prior day's high, it didn't hit the prior day's low, and it certainly didn't hit the prior week's high. But again, what's it like it's doing again? It was like it's wedging. It was a lot of call volume coming in on this, and that's when it started to move up in the positive. So every time we've had this, there's usually a big break up or down. And so again, we'll know in pre-market tomorrow what this is going to do. It's setting between, we pull out a little bit, between you got an hourly fair value gap above it that's very old. They can pull, then draw it up for liquidity. Also, you got the prior week's high up there as well. And then below it, you got that 4-hour fair value gap, which goes back to December 14th. And that trend line, ascending trend line up, really for support and for a bounce, right? And again, right here, that's the trend line from the all-time high coming down here. So again, when you look at this, what's it doing again? Really just wedging, right? So a small wedge and a bigger wedge. And so expect a nice move coming out of Tesla soon. I think all the bets are going for bullish. So sometimes the market likes to do a rug pull. We'll see. Now AMD, good day today. We had talked about 143-ish being where you probably get your next resistance. What is that? That right there is a weekly fair value gap that it mitigated to the penny. Didn't move anything farther than that. But if it continues to move up, 153, 157, and then all-time high is going to be. Now, of course, what are we looking for here? To turn, as you can see right here, I always like to go through here and look for any kind of RTH gaps, fair value gaps, because they are powerful. We're going to hit a few on the way up, but when we scroll over right now, I mean, again, semiconductors are pretty much on fire. at this point in time. There's one right there that should be mitigated. We'll see if it turns 140 into support. That's usually what's been doing, is moving up and then taking that prior level of resistance, turning into support. So it's been a good move for it. Now NVIDIA just struggling right here. You can see this is 3 times now. You get between 495 and around 505 in that area. And so we'll see if it can find, if it can break above that trend line right there, then yeah, we're going to go for all-time new highs on NVIDIA for sure. I mean, the moving averages look fine. And when we look at the RSI, you can see some slight bearish divergence right there, but we see this so many times on NVIDIA just not play out, right? Just not play out. Now, if you look at this, why do you think semiconductors are probably going to be pretty hot this year coming up and continue their momentum? One, you got AMD and NVIDIA, especially NVIDIA. You look at data center GPUs, if the CEO for AMD is correct, there's going to be billions and billions made in that area. Well, NVIDIA is sitting at 92%, AMD's got 3% of it, and everybody else holds 5%. So they're really the 2 biggest players, especially NVIDIA. Models and platforms, OpenAI, Microsoft dominate for sure. AWS and Google got a little bit of it. And you look at services, man, I mean, Accenture, 6.5%, and everybody else has got hardly any of it. Right? I mean, look at other, 86%. And so if AI continues to pump and pump and pump, then yeah, I expect semis to have a very good year. The question is, how much is already priced in? That's what we got to figure out. Now, when it comes to data that's going to come out tomorrow on Wednesday, going to end up with more manufacturing information. The services index from the Richmond right there, Dallas Fed Services Index, Dallas Fed Services revenues. And that's really about it, because it is a very, very light week. Because it is a very light week on data. I mean, really, the jobless claim is probably the biggest one out there. But besides that, it's a holiday week, right? So there's not a whole lot's going to happen that should affect markets one way or the other. But again, because of the light volume, markets and certain stocks can get pushed, right? You can see meme stocks go through the roof if that's where they want them to go. You're seeing a little dump in crypto. Also, when it comes to sectors, don't forget, I mean, obviously, crypto, for example, is in its bull cycle, so or in its 4-year cycle, excuse me. So, you know, that could be a whole nother thing that people are loading up on as well. And, you know, again, as I told members in the video today, the X factor for all this is going to be at what point in time is all that record amount of money and market money market funds come in. I think it's when, if the Fed starts to cut, I think that's when you're going to see it come in. Depending on what the economic data is doing. If it looks like we're on a verge of a recession, maybe not. But don't forget, with money markets, savings accounts, all that good stuff, if the Fed starts to cut, what happens to your percentage? It goes down. I mean, for years, there's no point in putting money in a money market, savings account, CD, anything, right? And so I heard somebody say this weekend, like, oh, we're just going to take this money and a big lump sum, just put it in money market and forget about it. I'm like, in my head, I was like, the Fed starts to cut, whether it's be, you know, because we're going to recession or we hit a soft landing, that money market is not going to be very good for you, right? Because they're going to continue to drop it down. That's what's going to happen. That's what happened last time. So if you're enjoying it, you're going to hope the Fed keeps rates high in a way. And if you're a business owner, you're probably hoping they start to cut rates. So anyway, hope you guys got something out of it. Hit the like and subscribe button. Let me know what you think the market's going to do the rest of the week and the beginning of January as well. And I will see you guys tomorrow.